The front pages of major newspapers today, particularly the Wall Street Journal, highlight growing concerns within the business community. The Wall Street Journal's headline, "Where Investors Play Defense and Switch to Dividend Stocks," underscores how market participants are seeking refuge in more stable investments as fears of trade restrictions and economic slowdown intensify. The business and finance section kicks off the week with the headline "Markets Wake Up to New Reality." In his analysis, James McIntosh delves into the turbulence hitting major stocks, particularly Tesla, which has suffered an extraordinary decline of 45% from its mid-December peak. The downturn is not limited to Tesla. Big tech stocks and the Russell 2000 index, which tracks smaller companies, have both dropped by over 10%, falling below their election day levels. Meanwhile, the S&P 500 has dipped beneath its November 5th standing, and the US dollar has weakened significantly. Beyond Wall Street, concerns over the broader economy are mounting. Over the weekend, Washington was abuzz with discussions about President Donald Trump's reluctance to rule out the possibility of a recession. When asked about the likelihood of an economic downturn this year, Trump refrained from making a definitive prediction, instead emphasizing that his administration's economic reforms were substantial and would take time to yield results. As Joe Scarborough pointed out on MSNBC, the Wall Street Journal underscores investors' shift toward dividend stocks as a defensive maneuver amid mounting anxieties over inflation and trade policies. Consumer confidence saw a sharp decline last month, the largest one-month drop since 2021. Additionally, U.S. employers significantly increased layoffs in February, with job cuts surging 245% from the previous month, marking the highest level in nearly 5 years. CNBC also noted Tesla's ongoing struggles, with the company's stock experiencing a 7-week losing streak since Elon Musk's visit to Washington. This marks the longest such slump in Tesla's 15-year history as a publicly traded company. David Ignatius pointed out that investors are grappling with the unpredictability of Trump's policies. Since his inauguration, a wave of policy shifts has sent shockwaves through financial markets. The tariff wars, in particular, are seen as potentially inflationary and counterproductive. Many analysts fear that the restructuring of America's manufacturing sector, a cornerstone of Trump's economic vision, could take years to materialize, leaving businesses and investors in a state of uncertainty. At the Davos World Economic Forum in January, financial experts warned that markets had been priced for perfection, leaving plenty of room for a downturn. Now, those concerns are being realized. Trump's recent comments acknowledging China's long-term economic strategy compared to America's quarter-to-quarter approach struck a chord with corporate executives who have long criticized short-termism in U.S. economic planning. Wall Street's jitters reflect broader anxieties about the Trump administration's economic direction. His goal of reshoring manufacturing and reducing economic dependence on global trade marks a fundamental shift that will not happen overnight. The transition is already creating economic ripples, with major financial publications, including the Wall Street Journal, Financial Times, and The Economist, warning that these policies could inadvertently tip the U.S. into a recession. Analysts on Wall Street argue that these disruptions were not inevitable. The economy was performing well before the administration's push for sweeping reforms. However, if Trump is committed to reshaping the U.S. economy into a more self-sufficient and domestically focused system, short-term volatility may be an unavoidable consequence. The administration appears to be pushing for rapid implementation, likely in hopes that by the time the 2028 election arrives, voters will have moved past the initial economic turbulence. As some have noted, reversing 30-40 years of globalization cannot happen in a year or two. It's a long and costly process. Economist Dave Chappelle once humorously suggested that an overly insular economic model could leave Americans asking, "Do we really want to pay $99,000 for an iPhone?" That rhetorical question captures the trade-offs at the heart of this economic shift.